Welcome to the Transparent FX Academy. I'm Nick and I'm a top author and trainee with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the chart. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong historical structure level for this market. In fact, what we know is that from here, all these previous rejections to the upside were created. And what we can see is that after the market broke this level to the downside, all this previous support was turned resistance here. The market, in fact, tested its zone and rejected it to the downside with the creation of this red candle. But now we had the break back above that zone, which makes once again this previous resistance become support. And as the market is currently testing this previous resistance turn support, we could expect this rejection to the upside, and we could expect even more bullish continuation, as already happened in the past every time that the market tested this zone. So here in the monthly, everything looks very bullish. Dropping down on the weekly time frame, what do we have? Well, from a weekly perspective, what we can see is that we have a market which is currently approaching a quite strong level of previous weekly resistance turn support here. Now we can see that that is already exactly what was happening right here when the market had broken above this previous high with this move to the upside, retested this previous high, which is previous resistance turn support, and rejected it to the upside very aggressively, which is exactly what you usually expect in a situation like this. Now, what we can see at the moment is that we have exactly the same situation with the market approaching previous weekly resistance turn support, from which once again we could expect a potential reversal to the upside. We can also see how, if we look at the patterns of this market, we clearly have an impulse followed by a correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50% retracement lining up exactly with this previous resistance turn support, creating a confluence of support in this area, which we could in fact expect this market to test and then to reject to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market, and we check the data precisely for the pound, what we can see is that with the last reports, we went from having a negative net positioning of minus 24k net positions with way more shorts than longs. In fact, we had 52k shorts compared to only 28k longs from an institutional perspective, all the way up to currently having a positive net positioning, so plus 58k net positions with way more longs than shorts, 111k longs compared to only 53k shorts. So clearly institutions are moving to the bullish side for this market. And keep in mind that if you're checking the data for the GBP, you're actually already checking GBP USD because all currencies on the spot are traded against the USD. So it is very clear that institutions are moving to the bullish side for this market, and this further increases the probabilities that if we will see a correction to this area, the market could get a rejection to the upside. Now, if we go down on the daily time frame, what do we see? Now, here on the daily, I did speak about GBPUSD quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this move to the upside. Again, from here, I explained all the reasons for which we could expect this higher high. Then we had this impulse and correction, and from here I made another breakdown explaining why we could expect an impulse, correction, and the creation of a higher high. And in the very last analysis, the market was around this area, and explained all the reasons for which we could expect this move to the upside, which again is exactly what the market did. And by the way, I will link in the description all these previous analysis, so you can go and check them out for more free education. Now, at the moment, what we can notice is that as we were already identifying by looking at the monthly and weekly time frame, the market is approaching quite strong previous resistance turn support also here on the daily time frame. In fact, from here, these two previous rejections to the downside were created. The market kind of created a double top at this zone. We can see these two rejections. All this area is now turned support. Also here in the daily, we have an impulse and a correction. So also here, if we want to measure this correction, we have to take our Fibonacci from the low to the high of the impulse leg, which shows us how we have a 0.5 and 0.618 retracements, which are currently lining up exactly at this area, which is also just above this previous structure resistance turn support, which creates confluence of support instead of this area, instead of which we could see more institutional longing, because we have already seen that institutions are currently moving to the bullish side of this market, so adding longs. So instead of this confluence of support, there is definitely the possibility to see more institutional longing, further increasing the probabilities of a potential reversal higher. So how we could be approaching this potential move to the upside? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point, we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entry and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment I'm running a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program you open an account with them, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that there is still time to join before the offer expires and price goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description. At least you're supposed to go and check it out, and I will see you in it. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.